Good afternoon, everyone. Thank you so much for joining in. Welcome to India Factoring and Finance Solution Chat Show, Factoring One-Stop Solutions for Your Global Aspirations. I'm Renu Balwara, Assistant Vice President Relationship Team, India Factoring and Finance Solutions. I'm your host for today, and we will be discussing the topic Current Economic Scenario and Working Capital Solution for Businesses. Before that, I would like to introduce India Factoring and Finance Solutions to you. India Factoring offers working capital solutions through factoring products aimed at converting your receivables into cash. The company is a subsidiary of a European bank, Bank Malta, and registered with RBI as an NBFC factor. India Factoring is also an 83 category authorized dealer. Through our global network, we offer one-stop shop solution around receivable finance. So now I would like to take this opportunity to welcome our eminent speakers. Our first speaker for today is Mr. Nikhil Mehta, Business Head, Treasury and Debt Solutions at SMC Global Securities. Mr. Nikhil carries with him diversified experience of more than 21 years in financial markets, primarily in forex management and trade finance. He also has been into business consultancy for more than 10 years. Prior to SMC Group, he has been integral part of multiple organizations of repute like HDFC Bank, Yes Bank, HSBC, Standard Chartered Bank, and Aditya Birla Group. Welcome to the show, Mr. Nikhil.
Yeah, thanks, Renu.
Yeah.
Thanks for
We,
the welcome and really appreciate.
yeah, we look forward to having a good discussion with you today. Yeah. Now I would like to introduce our second speaker for today, Mr. Singh Bhutani, Regional Head and Executive Vice President, India Factoring. Mr. Puneet is a seasoned banker with a demonstrated history of success in the financial services industry. He has over 20 years of rich and insightful experience in banking with expertise in corporate and retail banking business. He is also expert in trade finance, international factoring, and corporate finance. He has transformed North region into highly profitable region in a short span of time by driving export factoring business growth. He is also managing strategic tie-ups with various banks and financial institutions to promote factoring business across country. Prior to joining India Factoring, he has worked with Yes Bank as Senior Vice President and was managing Central and South Delhi territories. He has also worked with HDFC Bank and managed branches across Delhi, Punjab, and Haryana. Welcome to the show, Mr. Puneet.
Good afternoon.
Yeah,
Thank
good
you.
afternoon. Yeah. So
I,
before we
Hi.
yeah. Yeah. Hi. Yeah. So before we start off with the chat show, I would like to tell our audiences that we will be running a live session on Q&A along with the chat, and you can ask your queries in the chat box below. So now, like we have seen recently, there have been multiple developments in Indian economy. First being RBI hiking the repo rate and the CRR, which was a surprise move for a lot of economists because a month back RBI had not shown any intentions like that. Second, government has entered into FTAs with Australia and UAE and is into a negotiation with UK. So, with all these development happening in Indian economy, we will be discussing the impact of weakening rupee on Indian economy, plus how exporters can take opportunities of these new FTAs that are signed by the government. So, in this scenario, I will start my first question with Mr. Nikhil. Mr. Nikhil, what's your outlook on rupee hitting all-time low versus the dollar? And how do you see rupee movement against euro and pound in context to dollar index movement?
Uh, Renu will like to take you back last month. Across on 7th of April, exactly, dollar was trying to touch the high against rupee, and it was trying to meet across with a very important psychological level of 77, and around 76, 97, 98, there was very strong RBI protection, and RBI was continuously selling dollars to save that important psychological level, and ultimately dollar was not able to see those levels, and rupee was somewhere consistent between 76, 90, 97. And then we see for a brief time, we see again, then we saw a brief appreciation of rupee, and it even touched at 75, 90, and 99 levels. And then probably on 9th of this month, 9th of May, in the morning when the rupee market got open, we saw a level of 77 cross, it was 77, 45, 46. And probably RBI overnight can't enter into the markets. And then we had a new low, and that day we saw level of 77.53, also 53.54, and we ended at 77.43, 44 odd thing. So it was not, it was sudden, it was not an overnight move, to be honest. Dollar has been gaining strength across the board, and it has been happening for long now. There are a lot of reasons, and probably we can discuss a few of them. First across is the tight global liquidity, and in anticipation of very aggressive rate hikes from the Fed, which has led to broad selling across equities. That has been the spoiler of the party, to be honest. It started from there, and then probably when you look at very important benchmark papers, you see US yields. The 10 year US yield has been between 2.6, 2.7, and which was that's the zone it has been maintaining. But then of late, last week we have been seeing raising at 3.17. Those are very alarming levels typically. And once that happens, you see a lot of sell off again in the emerging market, because then the risk aversion comes to the market, and the global investor wants to look for safe haven with a dollar. And it has another catastrophic effect on into the markets when we see at the latest figures. uh, Financial institution has taken across 1.23 lakh crore out of the Indian capital market. That's a huge amount. In dollar terms, approximately 18 to 19 billion dollars have been evaporated from year till date. That has belted again a lot, and RBI has been coming with a very measured stance. They have their own reasons. Renu, if we talk about the RBI Forex Reserve Kitty, through which through which they enter into the markets through forwards or spot movements. What has been happening is in October 2021, my memory goes back, they were sitting at a very, very comfortable levels. And in a span of, say, next 5 to 6 months, the kitty has been loosened by $42 billion. That's approximately 7 to 8%. Yeah, they have very good numbers to take care. The forex kitty is not in a negative zone, to be honest. But when in 5 to 6 months you sell 7 to 8% of your reserve, then you don't want to be very aggressive. So that has been along with the global factors coming from the U.S. market. The RBI mute response, or I'll not say it was more towards a measured response, has something which we have seen. Then coming to this Russia-Ukraine crisis, we all know that India is a net importer of crude oil to the tune of 80% on the annual basis. When the crude is sitting, and this year we have seen the crude has been seen a high of 60%, and those numbers again are really relentless number to take care for the Indian domestic economy markets, and even for the RBI also. And possibly the only thing is that the oil is not looking to cool off. It's melting around 110, 112. So these are not at all comfortable levels for net importer of oil like India. So these has been the factor. And then probably when we look at dollar index, it has touched 104. When we look at dollar index, uh, these are 20-year high we are talking about, 104.47. The If you look for a few years back, it was at 90 to 93 levels, and now it is sitting at 104, which has again caused havoc on emerging currencies, and India is obviously one of them. And then when you move across from the dollar index movement, you can't isolate yourself from the Chinese economies. Their foreign reserve is as good as the GDP of Indian markets. And in mid of April, what we saw, Renu, was that they started depreciation of Chinese yuan started happening from 6.3 levels. It went down to 6.7, and then so this is what we are looking across, that Indian markets was also falling the same, and along with the depreciation of the Chinese yuan, even we have gone through the depreciation. Even though we have been better, we have outperformed Chinese yuan. They have seen a depreciation of close to 5.5%, and we have depreciated close to 4%. So these are typically the factors because of which we have seen dollar getting strong against the INR. Now, typically going to what we expect, the dollar index movement or other factor movement on euro rupee and pound rupee. So dollar index, ultimately the levels which he has seen, it has got a walk on the entire market. You see on when you look at euro, it is right now trading at 5 year low. When you look at pound, it is trading at 2 years old, 2 years low. When you look at Chinese yuan, it is at 18-month low. When you look at so all the currencies, even Japanese yen is 12.46% belted. When you look at Malaysian ringgit, it is 5.5% belted. So it is not that only Indian markets are suffering. So these are dollar index movement are typically leading factors. And then when we see across with them, those are the lagging movement which we see. Coming back to euro, because European Central Bank is typically having a dovish policy, and when we look at the Fed FOMC meet, they are having a hawkish stance. So we are having a very bearish. We are very bearish on euro dollar pair right now. It is already quoting at 1.0405, which are already 5 years low. We are looking at 101, 102 levels. So parity to dollar is also not discounted. And obviously in India we are more concerned about euro to INR, and we should. It is right now quoting at 80, 81, 81.5 levels, and not to be surprised if it goes and sees 78 to 79. So these are the levels, because we are highly the markets, and we are very bullish. We are maintaining a very bearish stance on the euro right now. When you move to Bank of England denominated pound, the issue remains the same. They are also having a very dovish stance, and once against the hawkish stance of aggressive rate hike by Fed. So again, pound has been taking a lot of belt. It is right in the morning also. It was quoting to 1.2250 lows. We are looking at a level of 1.22, and when we look into denominated to INR, you should not be surprised. From 95 they should be looking at 93.5, 94. So nothing good is happening when any currency is trying to stand against the dollar right now. So this is what we are looking overall for euro and dollar against the major currencies as of now.
Very rightly said, Mr. Mehta. So generally, like they say that dollar enjoys that supremacy, that whenever there is a volatile market, people run towards dollar and make it more of a safe haven
That's right.
for themselves. Yeah. Mr. Puneet, your views also, if you can provide your views on this, that how you feel that the market of effects will be in the near future. Yeah.
I think Nikhil is bang on. Whatever he said is very well understood. So, see, inflation is a demon which is very difficult to tame. So, central banks across the world tend to use interest rate cycles to maybe tame inflation and maybe have a control over overall supply management. So we also see that going forward also we expect Indian rupee to depreciate against major currencies. We see more rate hike happenings very soon. So this rate hike which happened in India, nobody was expecting. So in terms of our regulator, they tend to preempt, and this was an unexpected hike. So going forward, also we see rate hikes happening across central banks, and they may be more than what is market expecting, because everybody wants, because now the inflation is beyond any comfort point. The only way to kill demand right now is to tame inflation. So I think similar scenario could continue to happen for maybe times to come. We can see hikes across currencies. I think.
Okay, okay. Yeah. So there's one question by Mr. Ramanathan S. In 2008, the mere announcement by US Fed led to a weakening of the rupee. This time, the RBI has a large war chest. We still have USD 597 billion despite offloading of dollar 40 billion. Do you expect further weakening of rupee? Mr. Nikhil, would you like to take this up? Yeah.
Yeah, really, the fact is very clear. All the currencies are in sync with US right now. There has been depreciation across the board. It's not that Indian currency is taking a belt. You talk about any emerging currencies taking a belt right now. So rightly asked, that we have a sufficient chest of $597 billion, but while I was covering, we have already lost 8% in 5 months. So we don't see a lot of RBI intervention happening in the coming days. Now, coming back to what we expect, do we expect more of weakening? Yes, certainly on cards. I'll be really mad to offer technicals level, to be honest, because at this point of time, Renu, nothing is working. None of the technical charts are working because new levels are coming into picture. Uh, Erstwhile, we used to talk about 73 to 74 range. Then the range was adjusted to 74 half to 76 for dollar to rupee. Then new equilibrium came and the range was now 76 to 77 half. So with the central banks, even the economies are adjusting their mindsets of the level of depreciation which are happening. Until and unless the central banks are trying to move from dovish or accommodative to neutral and hawkish stance, they will feel a lot of heat to stand against the aggressive rate hike which is coming from the Fed. So obviously we have been seeing, like Puneet rightly said, the RBI governor came with an unexpected announcement last week, and but that was just, and if that would have not come, trust me, we could have even seen level of 78 to 78 half, because that was predominantly done to ensure that your own mother currency does not weaken. They can't stop the volatility, but they don't want to see unpleasant scenarios of 1% depreciation happening overnight, like the cases which happened in 2008. In the morning you come, there is a 1% of a depreciation of all the currencies. So this is something they want to steam out this uh, volatility to which is trying to curb into the market. So obviously 78 is right now, 78 is obviously on the card. Today also in the morning, when Chinese yuan moved from 6.7 to 6.76, again we saw again a high of dollar against rupee has hit today 77.54. We have already seen into the market. Yesterday when the market was sitting at 77 2022, there was a mindset that maybe those was a panic movement. But again, after 2 days, again this market has seen those levels. We don't see rupee gaining strength at the moment until unless the trend changes. And so that's it. We are looking for more depreciation right now against the dollar.
In fact, I would go one step further. I think Indian rupee has not depreciated to that extent like other Asian currencies.
Yeah,
Right.
that's right, Puneet. We are in list. We are sixth in outperforming other currency. We are better than Chinese yuan. So people
And
think
yen
that we are
also
doing
we are
this.
very
Yeah.
better.
So we have not depreciated. It's not been a free flow. Like in 2008, we saw a free flow. In the
Right.
morning, 1 rupee, 1.5 rupees, it's going. It's not a free flow. If you look at, it has been a very measured depreciation, which Puneet is also right in saying that we have
Correct.
not lost the ground, even though Russia Ukraine crisis is not is still boiling across, but that also has not, we have yet not seen 80 level which the market was, which a lot of market was expecting to touch in a free flow. But yes, depreciation still remains on card against the dollar.
Yeah, that's
Agree.
quite insightful, Mr. Nick. Yeah, so I'll take up the next question. That is by Mr. Gopi Krishnan Hanumathan. While exporters shipping goods with the credit period looking to a cash and depreciated rupee and let go hedging the FCI exposure, would it be wise for them, knowing the downside risk of non-realization as well, too many uncontrollables in macro space? Request your suggestion, particularly for SMEs and MSMEs without strong treasury desks.
Yeah, Mr. Gopi is rightly trying to point it across. This time, when the turbulence time which we are saying, you can't run away from risk management. You can't have love for particular levels. To be honest, you can't keep on waiting for 77, 75, 77, 50, 78 to come, and then you start your hedging. Hedging has to be done. The only thing is how to hedge it and when not to hedge it. In this sort of a market where there is lot of insanity happening, and when you don't know what tomorrow morning is going to be, you can just take care of 9 to 5 today. And in this sort of a scenario, you need to be very clear that what we want to do and how much we want to do. You need to be very clear in terms of your own pricing and what the market is offering at the moment, because premium is also very healthy right now. So it's going to be mix and match of when to hedge, how much to hedge. But if you're moving to that mode where you think that 78 will come and I have done my costing at 72, 73, then probably you're going to lose the race in long term.
Okay, yeah. Okay. Thanks a lot, Mr. Nikhil. So now that we have been discussing okay. So there's one more question by Mr. Mayank Mahajan, which is related to the topic that we are discussing right now. So, what effects do you foresee on long-term premiums of USD, GBP, and Euro? And also, at what USD INR level do you expect an RBI intervention, if any, given we are import-heavy economy too?
So, Mr. Mayank, already I'm sure you'd be your business will be bleeding a lot because of this depreciation, which is not trying to cool off. The only thing is RBI. To be honest, no one knows when RBI will jump in with their intervention through their own means into the spot and forward markets. The only thing is they are okay until and unless there is a lot of unseen volatility. Obviously in the morning, if today we are shutting down the market around say 77.48, 49, and in the morning when you come you see level of 77.98, 99, then obviously you will see RBI intervention. But we don't see that they will come at every depreciation of 20 to 25 paisa. They are here to protect the volatility. This is what the RBI mandate is all about. They are not looking for particular levels. They and more than that, Mr. Mike, you need to be very clear that this depreciation is happening in course with all the global currencies. If it would have been only Indian markets getting depreciated and belted against the dollar, then they would have been come across with their war chest and trying to protect the rupee against the dollar. But since it is happening on the global piece, they are just trying to see at what levels. And to be honest, no one exactly knows at what levels, whether it's going to be 77.95, whether it is going to be 77.85, or maybe 77.60. So that remains a guess, to be honest. But yes, if you see a 0.70%, 0.80% volatility overnight, then surely you can see them coming into the markets.
Yeah. Okay. Thank you, Mr. Nikhil. Yeah. I hope the doubts, the question have got cleared for Mr. Mayank Mahajit. Yeah. So I'll take up the next question, in which, like we were discussing, that RBI has recently hiked, and it was an unexpected hike by a lot of economists. So, what do you feel that what was the dynamic behind this move, and what is the expected impact on the economy?
Uh, I like to put it across. Let's go back to June 2021. That was the time when FOMC gave a hint that they will like to move to the aggressive rate high cycle. At that point of time, there was no Ukraine war crisis happening. Then that happened, and India and other markets was not from a hawkish point of view. They were not trying to raise the interest portion the way US, because in US market typically inflation was also happening and the growth was also happening. And then when the Ukraine crisis happened, US was able, being a superpower, they were able to safeguard their economy. But when it came to other commodities-driven economies, like which are net importer, like we talk about Singapore, we talk about Turkey, we talk about India, they were not able to absorb the shock the way it was absorbed by the US. And then came the monetary policy divergence, which we call about, because not all the global bankers, all the central bankers were not in the mindset of raising interest rate. And then came the sudden RBI intervention. It was only because they could sense now it's the right time to change the monetary policy stance. And from say a mid of dovish and accommodated, they move to neutral, and then probably now they may come up with a hawkish stance with time to come. But this was the mindset, because they were trying to align themselves. And Puneet was also talking about the inflation. Indian comfortable level is 2 to 4%. That's the target which RBI governor, the RBI board has taken. Now, what is happening if you talk about Feb and March? It has been clearly being overshooting that comfortable level, causing a lot of uncomfort to the markets. So what is happening? Even after 2 to 4, they have kept a 2% of a cap either way. So even that has been surpassed. And April number are going to be released today. And obviously, the data which RBI possesses in their armory, they were very sure that these are not going to be very healthy. That was the reason they have jumped before, giving a mindset that now this is the way we are going to work. So that was predominantly the mindset. So this is why we expect RBI to come suddenly when nothing was expected. Now, coming to how it's going to impact to the Indian market. One thing is for sure, we are not a very high in terms manufacturing country. We are a country which is driven by a lot of service, and we are more towards service and consumer driven country. And this sudden rate hike is not going to derail the growth in long term. It is done predominantly to give a mindset that we need to cool off the verging inflation in the short term. but obviously they are not trying to curtail the growth factor into the long term. So this has typically been done to ensure that the common man, which has been suffering because of oil, 105. When we talk about Indian currency, also the food markets which are being getting very pricey. So this has been done to ensure that for the time being it is done a cool off, but long term we don't see a derail of growth into the Indian market because of this.
Okay.
And also in terms of what we see in the next RBI cycle also is coming in the month of June, Renu. Predominantly we see 25 bips is something which is on card, and that point of time they may come up because from dovish they have already moved to neutral to hawkish, and obviously once we reach the June stage, then that we will be more towards, we will having a better idea in terms of how the future is going to be.
Okay. Okay.
I'd
Yeah.
just
Well
like to
said.
add
Yeah.
two more points here. See,
Yeah. Yeah.
we
Mr.
don't
Nikhil.
see India as an isolation. So all economies are very interrelated these days. So whatever
Correct.
action is happening by one central banker, more or less, it has to be repeated in the other economies also, because that is the only way things will cool down. Excess
Right.
liquidity has been pumped due to COVID last 2 years, so this liquidity has to go out. It
And
is
you're
essential.
absolutely right,
Central
Puneet,
bank
because
they need to kill the demand right now. That is a tool which they have, and I think they are using that tool very effectively.
Puneet, you're absolutely right, because the day when RBI governor jumped into this sudden raise of interest rate of CRR and repo, yesterday we saw four more central banks have raised the interest rate.
Done that. Correct. 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 Correct.
So we are all
Yeah.
in sync. So the global markets, the global economy, all in sync. There is no, it's no way and isolated anywhere.
Puneet, if you can just emphasize on this move, impact of this move on the loans and advances also, if you can emphasize on that part, that will be also great.
See this rate, we can already see that even just one rate hike, all the bankers across have increased their ratios. So the impact is going to be there. Right now, the impact is less, but what we see as a future is more rate hikes. The impact you will see because capacity, like for example, in terms of retail loans. So a normal EMI would substantially get inflated once we have a rate, one or two more rate hikes. So yeah, it will definitely leads to demand getting disconstructed. So yeah, effect would normally would be there.
Okay, okay, great. Mr. Nikhil, we'll move to the next question. That is,
So,
what is the latest global monetary policy stance which is driving the FX volatility high? Further, what is your expectation of RBI rate hike in June and its possible impact?
Renu, first let's talk about what has been the stance in 2020-21. What we have seen was that equity market was having a lot of volatility because there was a lot of loose funds into the markets. All the central banks were being very accommodated, and there were a lot of loosening of funds into the market to ensure that the right recovery comes from COVID impact. And FX market was barely very flat. Now come back to 2022. What we have seen is there is the volatility of FX market has outpaced even the equities. So now this has been seen a very different culture in terms of the way FX market is pertaining and the way equities market is pertaining. Now coming back to the monetary stance, what we have seen is Fed is very clear. Last week they came up with 50 bips high, and then they are very clear that they want to take out the money out of the markets. Not going to be any easy pumping, and that is they have a very hawkish stance. But on the other side, when we look at say Bank of England, they are very dovish, even though their inflation is also on the high side, but they don't see a lot of growth happening, so they are maintaining a very dovish stance. When we move to the European countries, the ECB, the bankers, they are also again going through the same problem. Growth is not happening, and then inflation they are booming up. Stagflation is something which they are next to is waiting next into the queue. So they are also again maintaining a dovish stance. When you talk about India, it is in between. It is neither on a dovish nor on the hawkish. They are trying to be somewhere between neutral to hawkish. Hawkish they may come up, but right now they are more towards neutral to hawkish. And every words when the central bankers talk may cause a lot of havoc. Last time we have seen 1,000 points were waived off, what was evaporated as soon as the RBI governor started coming up with this 40 paisa jump into the monetary policy. Even the two more major economy, like we talk about PBOC, we talk about China, they are right now having a very accommodative stance. They are trying to have a very loosening because of COVID, they follow zero COVID policy, and then because of that, entire lockdown is happening. Most of the major cities are locked down, so they are seeing that not even growth is coming, and not even they can't see any inflation also, because people are not able to come out. When we look at the sixth major economy, which is Japan, the Bank of Japan is very clear. They don't have inflation. They have to support inflation, so they have a very losing monetary policy. So when we look at these six major economies, there is a lot of divergence happening. And to be honest, in when we talk about later on, everyone has to follow what US is doing. So US is the first country to move to aggressive rate hikes. Slowly, whichever currency wants to have a breather, and they have to also raise the interest rate, and then that's the way RBI or their own central bankers have to come into picture. This is the change in the monetary stance which we are seeing right now. Coming back to June, we are talking about 25 pips is right now what is on card. 50% will not be a shock, but maybe a surprise if they come up with. And then probably what is going to do is going to cool off. If there is a free fall in dollar rupee also, it is going to cool off. And they are trying to come up with this only to ensure that like we are talking about volatility into the FX market, that can be stemmed. They are okay with say 0.2, 0.3 percentage of depreciation happening, but they are not okay with 0.8 and 1% depreciation. So this is the impact which we are looking on the Indian markets.
Yeah, I think inflation is one of the biggest challenge that all the economies are trying to fight right now, and every central bank is trying to take corrective measures just to ensure that this currency is secure and strengthened.
Yeah, the only thing is, Ruby, there is another divergence which is happening. This inflation is purely not from the demand side, because of COVID, because of China, because of this lot of macro dislocation factors happening across the board. There is an issue on the supply side also. So
Okay.
this is a dual war which all the banker has to face. It is not that there is lot of demand coming. One side there is mid of demand, and the other side, Ren, what you're looking about, there are major supply constraints.
Right,
So
right.
Commodity
this is,
prices.
yeah, so it is not going to be very easy for the central banker to raise the interest rate, because inflation now has got two legs. If it was purely a demand leg, they could have increased the rate of interest and slashed it. But one on the other side, when you have a supply constraint also, Ruby, supply constraint also, then it becomes a real headache for them. So now how they come up, apart from the rate of interest, they'll come up with other factors also. But this is the
Right.
way it is going to be causing a lot of headaches in the near term.
True, true, true. Correct. My next question would be to Mr. Puneet. Mr. Puneet, recently Indian government has signed FTA with Australia and UAE, and there's ongoing discussion with UK as well. How do you see this as an advantage to the Indian exporters?
I think this FTA would help the Indian exporter become more competitive as far as other Asian countries are concerned. Because FTAs are already in place with Vietnam, Cambodia, Thailand, Indonesia. So this is, I think, one of the very good initiatives by the government of India which they have taken. So exports from India would become more competitive. And as such, we are already seeing so much action. Everybody wants to have a China plus strategy. So across segments, we are seeing more and more inquiries which are coming, not only from the existing buyers of the seller, but more new inquiries coming. So I think it would be a very thing to look forward. FTA can be big for India.
Correct, correct. It will give new markets opportunities and it will facilitate export also. Mr.
Renu,
Nikhil,
there are
if
going to
you
be a
can
lot of
share.
other factors like
Yes.
UAE. We are looking to grow in 5 years from 60 billion to say $100 billion. From Australia, we're looking for say figure of say from 22 to 45. So more than the numbers which happen is there are a lot of players which are sitting around the pool and looking to enter into the market, because doing manufacturing in India is not at all easy. But with new opportunities coming, you may see a lot of them also entering into the market. Then another factor which we see is you can expect a lot of JVs happening. So a lot of joint venture. There will be a lot of investors sitting outside our premises, and they will like to pour a lot of money into the Indian market because we are rich in land and other infrastructure. So that may be helpful for the on the FX ground also. And obviously, you will see a lot of jobs coming into the unorganized markets. And this, I think, will drive next 3 to 5 years, because jobs are something which are the need of the hours. So I think this is going to be the additional cushion along with this, the FTPs, what we are being signed with Australia and UAE as of now.
Okay. So in this regard only, I'll take up the next question from our viewer, from Harsh. So he says, do you believe that factoring among the MSMEs will increase in this scenario with the entire FTA and all these things coming up? Mr. Puneet, would you like to take up this question?
So I think we are already seeing this happening. See, you have to understand what is the pain point the MSME or SME has. Their pain point is they don't have that much large balance sheet. They don't have access to working capital because they don't have collateral. So this is quite visible with the type of queries we are right now getting. An MSME who would have done maybe a 10 crore of turnover last year have orders worth 20 crore right now. So you can't expect an MSME to do that 20 crore in the same scenario they did last year. So yeah, more and more queries are coming for factoring because factoring is more aligned towards the buyer strength. There is no collateral requirement. Yeah, so this is very true. This is quite evident across the MSME segments.
Okay. Yeah. So basically the government is tapping more on the large markets, performing below their potential. So they are trying to get the demands out of there and helping. So I think more demand with these MSMEs will also increase. Yeah. So yeah, so this is Mr. Gopi is just sharing his view that he's thanking you for your views, and non-recourse export factoring should be given priority by exporters in this volatile market to realize the receivables instantly and concentrate on the growth. Very rightly said, Mr. Gopi. Very rightly said. Yeah. Okay. Our next question is with Mr. Vinod Chaube. This is to you, Nikhil. Foreign trade policy has been deferred till 30th of September. What we may expect the Ministry of Commerce in the policy to be announced that may support exports from India in such turbulent times?
Yeah, typically the way it is happening, Mr. Vinod, right now is that there are a lot of supply constraints which are happening from the export perspective. And then India is not a country which has got, like say China, which has got a lot of share into the ports also. And ports are something which you can't build overnight. So the Ministry of Commerce can typically come up with a lot of emphasis should be given to the logistic markets. If the logistic companies are coming up, because they are not logistic companies are those in India which don't have very large pie of share into the growth circle, and we are expecting them to come up with more cushion for the logistics sector, which has got global present also. So this is if this is taken care of in long term, then obviously export can, because there are a lot of exporters, like we have been also discussing with Puneet a lot in terms of clients which are looking for factoring. And when we meet up clients who are, say, approximately into the basket of 50 crore to 300 crore, the problem with them is they feel the heat while they have to supply the goods. And then this is where no one can do anything until unless the logistics system is up and running. So this is one thing I think which is missing, and probably this should be addressed at an appropriate time to ensure that the export don't suffer to that extent.
Okay. Yeah, very rightly said, Mr. Nikhil. So, Mr. Puneet, now with this growth momentum going on with the exporters, and there's an opportunity for them. So, which all industries you are expecting are going to benefit from this?
So, though I can name few industries, but the momentum overall is across segments. So, to name few industries, we are seeing a lot of attraction in apparel, we are seeing a lot of traction in textile. Then you go one down, handicraft is, which is a lot of action is happening. Indian handicrafts are in a lot of demand, not only in US and Europe. Queries are coming from maybe Australia or in New Zealand or in UAE also. Then, if you go one down further, so what is happening in China is they are trying to do away with those industries which don't currently fall in the purview of their economy right now. Maybe they want to do away with the steel industry, they want to do away with the chemical industry. So that also business is moving to India. So you can see a lot of action in chemical, agrochemical, a lot of action is already happening in steel. So I think momentum is all across. It is not defined to a particular industry as such.
Okay, and how do you say that factoring can help them secure larger orders while minimizing their risk? So in this scenario, how can they go about this?
So I'll explain the process, how it happens. See, once a seller has a purchase order from a large buyer anywhere across the world, those sellers can come to us and get the due diligence on those buyers. So once there is a confirmed purchase order, due diligence is done, buyer is credit worthy, then we can sanction lines on those buyers. So it is immaterial how short or how large your balance sheet is. If you have a confirmed order from a large buyer, you can be granted far higher limits than a bank could do. So factoring is precisely used for that purpose only, for getting your excess liquidity. Because if you have liquidity, then you can complete those large purchase orders if you have those facilities with you. If you have manpower, if you have factories, liquidity is the concern. Those sellers can come to us and we can chip in and we can partner in the growth.
Yeah, and with factoring, they take care of collection also, that minimizes the risk as well. So, Mr. Nikhil, in your experience, if you can tell us that what all industries are you seeing a momentum right now?
Aware of such cases coming from Jodhpur and Muradabad, which are very rich. And probably when we talk about our own daily NCR also, there are a lot of stuff coming from the textiles and the apparels also. Overall, whatever experience we also have with India factoring has been very rich, because I think there is one advantage. As soon as you jump into factoring, you are immediately going on cash sales. So yes, you may go for pre-shipment, you may go for post-shipment. That's another scenario where a lot of due diligence and probably your collateral and a lot of other stuff, your credentials and all those things are taken care. It's not a freebie. It's not that the India factoring or any such financial institution is not doing their due diligence, but it is comparatively much more easy. Nowadays, we have few clients which were 20 million, 25 million, and we were able to speed up the process in 15 to 20 days. And then what we have seen from them is the experience is good. So obviously they are saying that you are put across on cash sales. I'm very surprised that there was a company of revenue 5 crores only. It's a Kundli based company which we interacted. The parent company was approximately 29 to 30 million dollar. They started another company, and probably at that point of time I was in touch with Puneet also. We funded the parent company, then the subsidiary came, the child came to us, and then they have hardly done 3 to 4 crores. But they had a different line of buyers apart from the major from the parent company, and we are on the verge of signing approximately 20 to 22 crores of limit, and just last year turnover is 4 to 5 crores. Because this is not something which Puneet is saying. This is something which I have seen with my own clients also.
So
So now we are also
this is not an incident isolation. So we have seen across company doing an export of 100 crore, has a projection of export of 300 crore, and that is
yeah.
happening. This is real.
Yeah. So 100 to 300 Puneet, still you get comfort. When you talk from say 3 crore to say 20 crore, that is that is bit puzzling, because 100 crore you're very comfortable, credit is also comfortable, that's fine, it's okay, we can go ahead. But when you talk about 3 to 5 crores and they're looking for 20 crore with a confirmed buyer sheets of say 60 crore, then you jump in. I'm not saying banks will not able to do it. We are not here to offend any banking institution, but to be honest, India factoring is doing it. That is helping them a lot.
Because it's mainly because of the orders that are
Confirm
factoring
orders.
funding is more on confirmed orders than on the past track record.
That's right.
It's
That's
taken
right.
a mix of both. True.
That's
And
correct.
another industry that I have also seen is renewable energy industry. So there's a lot of export happening via a lot of exports is happening. That's we have seen a tremendous growth in that particular segment also. Semiconductors is also one of the industry that a lot of Indian manufacturers are getting into
Are
and
entering it.
are trying to export. Yeah. So I think this with FTAs coming in, there's going to be a great opportunity for all the
Right.
exporters out there. So, Mr. Nikhil, so next question I'll ask from you: how can forex risk management service safeguard currency and business risk during these volatile times? If you can emphasize on that.
Really, to be honest, there is no one on the planet which can which can tell to anyone what is going to be the exact opening of rates tomorrow morning. So what happens is typically when the client comes to a consultant, he thinks that he is able to zero his risk. And from the problem which happens is from zero, he's trying to zero his risk. That is not at all possible. And the second is trying to make money out of his forwards. So yes, obviously he will not appreciate if his currency is not hedged at a good level. But that does not mean that every time you want to see the perfect levels. Like right now, to be honest, in risk management, what we have done is we started selling dollars for client at 76, 60, 50, and 60 levels. But that is happening in tranches. You can't wait for 70, it never comes, it goes back to 75, 50, and your business is again gone. So what is happening is through risk management policy, which we try to drive for the client, which are very customized. We need to understand the pulse of the client. What is he doing? How is he doing? Does he have the structure? Now, what is happening with a lot of clients, Renu, is that they typically say that jinke saath with whom we are doing our own remittances, we are not being quoted into the right manner. So what we do is we create an infrastructure where if there is any price misquotation happening between them and their bankers, it comes to the picture. So first thing is we try to create a infrastructure where they know if the remittance is going, what is the rate? If the remittance is coming, what is the rate? So that is the first pulse of providing them with the right solution, which we call creating transparency. And the second thing is we assign them a knowledgeable relationship manager, which talks to their banker, make their life easy, negotiate on their behalf, create a MIS given to them. And then that's the way we, along with the risk management policy, when to hedge. Right now, it is more about when not to hedge. These are the mad markets, Renu, where it is more about when not to hedge, but suddenly this when not to hedge will become when to hedge, because this
Right.
market are not always going to be sitting at 70, at 79. Now what is happening with dollar rupee? The range is very excited now. It on the lower side we are talking about 78 half, 79. On the higher side we are looking at again at 73.50 also. So no one in the earth would have ever thought that 5 to 6 rupees can be a range about uh, for say dollar rupee. Forget about euro rupee and pound rupee. So volatility has come back to the cinema. It's not going anywhere for 1 year for sure, because 1 year is the time when at least US market, the Fed market, Fed central banker will take to ensure that whatever they have pumped into the market, whatever loosening can happen, they will do the tightening of the monetary stance. And then slowly other central banks, PBOC, our own RBI, then BOJ, then ECB, and then that's the way they will also jump in. So then that's till that time we need to be very clear with a lot of volatility happening. And obviously you need to have an unbiased opinion. Consultant comes back with an unbiased opinion, Renu. I've met a lot of clients who are exporter at 77, they'll not like to sell because they are looking at 77 half, because they don't want to sell at those level. As a consultant, we tell them very clearly, sir, why don't you hedge 10 to 15%? Are you here to speculate or are you here to hedge? So this
Right.
is where we add some value. I have seen clients, if now we see an appreciation and market go to 76, 40, 50, importer will stop refusing to hedge. So
Right.
that's not an appropriate thing. When the journey has started from 77 half, or say 77, 60, 70, 80, and you are seeing a 1.5 rupee of an appreciation for your INR, you should try to hedge 10 to 15%. So we try to come back with mix and match policies. The policies keep on changing as per the circumstances. And totally, I'm telling you, these are mad markets here.
Okay. Okay. Thank you so much, Mr. Nikhil. So I'll just take up the last question with Mr. Puneet and Mr. Nikhil, both of you. That if you can just talk about the synergy between SMC Group and India Factoring, and how customers of both the groups can take advantage of this particular synergy.
So
So
I'll put it across how we have been introducing our client to India Factoring, being one of the leading well diversified conglomerate in financial industry. We have got tremendous base here. We have got 17 lakhs unique clients. We are present in 550 city. We are a listed entity. and we are into investment banking. We are into everything. What apart from 83, we are not 83. That's it. So what we are doing is wherever the clients are coming, which thinks that we don't have the sufficient collateral, and we can see a lot of growth, because what is happening in this recovery time of pandemic, the margins has shrink. Now it is more about the volume game. You don't have a margin of 10 to 15 to 20%, which you used to have a decade back. Now it is more about 2 to 3%, 4 to 5%. So volume is the new king, so top line is the new king. So what we have seen is, once they are done with their own arrangement with their bankers, then specifically those manufacturer exporters, we are trying to put it to India factoring, and success rate has been truly good. So they are happy with the experience, and probably we are, as a consultant, we need to add value to them. So it is about adding value. Maybe India factoring maybe a 1%, 1.5%, maybe 2% on an annualized base, heavier than the bank. But to be honest, client can manage that if the value is right. Because any which is, if India factoring is not giving them limits without collateral and this non-recourse, obviously they are not giving, they are not able to get it from the banks also. So it is better to spend 1%, 1.5% extra and go to a financial institution rather than sitting back and losing your business to someone else. So that's what we have been doing in this collaboration.
Yeah. Mr. Puneet, your views on this?
I think the synergies have worked brilliantly well. So I think we complement each other in terms of, because SMC being a old player in Indian market, they have a very large reach. I think they have more than 60 branches. They have around 3,000 employees, so their reach is far higher than us. And moreover, this particular segment of exporter, this I think is maybe a match made in the heaven. So they already have a large exporter base which is already with them, and this is a product which is right now in demand. So clients, exporters are looking for such products because of whatever we have discussed. There is a FTA, there are PLI schemes happening, there is China plus one strategy. So each and every exporter is flush with orders. So what they don't have right now is maybe a working capital, which is the need of the hour. So I think the huge successes we have seen together. So not only this is a two-way referral what we work upon. So we do advise our clients on maybe hedging and various other products of SMC. So I think it's a very good start, and we see huge potential in this tire going forward also.
Oh, great. Thank you so much, Mr. Nikhil, for such an insightful discussion. It was great having you on the show, and we look forward to having more discussions with you in future. Yeah. Thank you, Mr. Puneet. Also, it was great having you on the show. Thank you so much.
Thank you, Renu. Pleasure.
Thank you everyone for joining us today. If you want to know more about India Factoring, you can get in touch with us on our LinkedIn page, YouTube, or reach us out on our contact details mentioned on our website link. We will be back with another interesting chat show shortly. Thank you so much. Till then, bye bye.